Thanks for clicking. Canadian mortgage rates are up all across the board, following a decision by the Bank of Canada to raise interest rate by 50 basis points 2 weeks ago. Following the Bank of Canada's decision, the Big Five banks immediately raised their prime rates on variable mortgages, and fixed rates rose soon thereafter.
We have to move now.
Last month, during our mortgage rate update, we talked about how mortgage rates had gone up by over 1% in the period of a year, and that trend looks like it's gaining speed as rates are up over 1% over the past 3 months alone. So what I want to do today is go over mortgage rates now that the Bank of Canada has raised rates by 50 basis points, especially with many predicting that another jumbo rate hike is coming on June 1st. Then I want to do a brief review of what these higher mortgage rates have done to mortgage payments since the rate hike started in February, as I think it helps to explain some of the cooling down of the real estate market that we've been seeing more and more across Canada. Then we'll take a look at what to look for next. It's the end of the month, so as always, we are expecting to receive April's real estate data coming in early next week, which I think will show an even greater slowdown than we've been seeing already. We'll obviously have updates on that on this channel. If you want to get those updates, click like and subscribe. But for now, let's get into these mortgage rates. So first off, insured rates. Insured rates are where you put less than 20% down, qualify, at least now, at the contract rate, the rate you're paying, plus 2%, and you have a 25-year amortization, and you pay the mortgage insurance. When we look at February's data, the best 5-year insured rate was 2.79. That rate was up to 3.39 in March and has risen to 3.99 in April. So insured rates up 1.2% since February, up 0.6% since last month. Then when we look at insurable rates, that's where you don't have to pay the mortgage insurance and you put 20% down, but you still qualify based off 25-year amortization. In February, the best insurable rate was 2.94%. By March, that number had risen to 3.59%. And in April, as of right now, that rate is 4.19%. So we've seen insurable rates go up from 2.94% in February up to 4.19% in April. Finally, uninsurable. Uninsurable mortgages are where you put 20% down and either A, use a 30-year amortization, or you take money out of your house. So if you refinance your mortgage, if you do an equity takeout, that's considered uninsurable. And rates have gone up for that as well. February's best uninsurable rate was 2.94. By March, that rate had risen to 3.49. And as of right now, in April, the best uninsurable rate is 4.29% on a 5-year fixed. Prime rates have gone up as well. As we mentioned, almost immediately after the Bank of Canada's announcement, the Big Five banks raised their prime rates. So come May, we should start to see prime rates of 3.2%. So whatever your discount is off prime will be that'll be your variable rate. But what has this done? What have these higher rates done to mortgage payments?
Do you realize what you've done?
Let's just take a base case of February's peak real estate price of $816,000, the highest average sales price on record in Canada. With the minimum down payment requirements and a 25-year amortization and a 2.79 interest rate in February, the monthly payment on that average home price was $3,600 in change. By March, that had risen to $3,907, and by April, we're at $4,165. So now the monthly payment on Canada's average house has risen by $500 in the period of 2 months. That's a big rise for 2 months for the average person. Now, prices definitely have dropped since February. In fact, we saw the first decline in Canada's real estate prices in the month of March, as the average price dropped down to $796,000. But that new average house price doesn't change the payments a whole lot. Even with using $796,000, the payment only goes down to about $4,065, or about $400 more than the average house price cost you in February. So just in 2 months, to get that same average house price, buyers are paying a little over $400 more per month than they were 2 months ago. So affordability is definitely plummeting. We've talked about in previous videos how buyers aren't going to be able to afford as much just based off qualification standards, as they now have to qualify at, say, 5.99, 2 points above the contract rate, rather than the 5.25 that they had been qualifying for over the past few years. So this is going to have a big effect on affordability in Canada's real estate market, and is likely to continue for some time. As we mentioned at the beginning of the video, many are predicting that we're looking at between 75 basis points and 100 basis points come the Bank of Canada's rate hike on June 1st, and that's just over a month away. And as we saw in the past few weeks alone, mortgage rates tend to creep up in anticipation of the Bank of Canada's decision. So as to what to look for next, the inflation rate. Canada's inflation rate came in much higher than the Bank of Canada was expecting in the month of March. Our inflation rate now sits at 6.7%, which was inconceivable a few years back. So the Bank of Canada, I think, is going to move fast, and they're going to move hard on these interest rates. So what to look for next? Keep an eye on April's real estate data. If we see price declines in the month of April in response to these higher interest rates, then I think we're going to see that these interest rates are having an effect. Also, keep an eye on the inflation rate. If our inflation rate is above 7% come the announcement in a couple of weeks from Statistics Canada, if our inflation rate is over 7%, I would expect the Bank of Canada to move fast, like we said, and they're going to move hard. There's going to be a significant rate hike come June 1st, in my opinion. We'll obviously have updates out on the real estate data, on the inflation rate, and on the Bank of Canada's rate as they come out. If you want to get those updates, make sure you click like and subscribe, and thanks so much for watching.